My name's Eric. I'm the founder and CEO of Burkholder Wealth Management. And joining me today is Val, our associate advisor. And we're going to talk to you about some end of year planning items. Some of them related to taxes, some of them just good year end planning things to do at the end of the year. And Val has kind of started us off. Why is it a good thing to look at the end of the year?
Yeah, so end of the year is always a little easier than beginning of the year. You have better clarity on your income. You have better ideas of how the year was, pretty high income, low income. And from there, you can find some strategies that could match this year's income and then leverage all this to make sure that you benefit as much as you can from tax laws and different tax accounts.
Yeah.
Do you want to start us with one of the most common strategy?
Yeah, so I think in general, it's a great time to rebalance your portfolio. Specifically, you can look into your portfolio for investments that might be at a loss. We call this tax loss harvesting. Oftentimes, you can trade a security that's at a loss, capture that gain on paper, and reinvest right back into the market. So you've only captured that loss on paper. You haven't actually gotten out of the market or turned it into a permanent loss by any means. Certainly help you with your taxes. And even in a year like this, where the market has done very well, oftentimes you have something that hasn't done well, or you bought it later in the year and it may be at a loss. So not only is it a good time just to rebalance your portfolio in general, look at your risk profile, but then look for those opportunities to capture some losses on paper.
Yeah, that's one of the great benefits of a passive investment strategy, is being able to find another fund with the same strategy, and then you can capture your loss and not being out of the market, as you said.
Yeah,
it's harder to do with single individual positions for sure. Another common one is making sure your 401k is up to date. Sometimes companies, they change their match, they change texting and the wording behind the match, so sometimes you need to contribute more to get 100% of the match. So make sure you're getting at least 100% of the match from the employer. And then if you can do more, if you're on a pretty high income tax bracket, then you should make sure that you're contributing as much as you can. And it's not as the IRA, so the 401k has a deadline of December 31st. Right. Not like the IRA where it's April 15th, so people sometimes get confused.
Yeah, and definitely if you're going to make a change to that 401k, it's going to be a payroll change. So you probably want to process that sooner than later, because you may only have 3 or 4 payroll periods left. So yeah, definitely make sure you're getting your match, you're maxing it out. Then there's other opportunities for like a mega backdoor Roth, would be a subject for another video, but there's the 401k deadline for those employee contributions is definitely the end of the year. And if you want to make any changes, they need to happen now.
Same for gifting. If you're planning on giving some to your kids and you need to give them a large sum of money, doing it in separate years would be the best, so you don't have to report on it. The limit right now is $18,000 per kid. So if you haven't donated anything and you want to pass along some of your estate right now, I think at least giving 18 before the end of the year would be a good way to do it. And then you could give 18 again and try to do that every year and pass along some of your wealth without having to pay some estate tax on it later on maybe.
Yeah, definitely. And some of these strategies are really good for anybody. Sometimes it is very dependent on your income, as you mentioned on the front end. So if you've had a high income year at this point, and it's pretty much it's going to be higher than normal, it's certainly a good time to look at giving appreciated stock. We always talk about that, especially at end of year. You can basically get a double benefit because you get the charitable deduction for the gift, but then you also avoid the capital gains on that stock. So it's a great time to look at that. In addition to potentially front loading some expenses if you're a business owner that you might have been planning to spend next year. If this year is a big income year, you move those expenses up and capture that now to offset some of that income. And so if you've had a high income year, there's definitely some end of year strategies to try to get that income lower.
Yeah, especially for our business owners, whenever that sale comes sometimes and they're selling the business, I think the donor advice fund is a really good time to utilize it the year of the sale to make sure that you can fund your gifting for years in advance and capture it at a higher tax bracket.
Yep, that's a great point. So the donor advised fund essentially allows you to capture potentially several years of gifting in the year that you sell that business or you have a big liquidity event, and allows you to manage it. You can still give it out as you'd like. You can even invest it. It can grow, and you can give more in the future. So there's a lot of benefits to that donor advised fund as well. That's a good point.
Yeah, and then on the other side, you have your low income year. Let's say you retired, you had some taxable money like a trust fund, and you've been living on it, and you haven't realized much gains for the years, and you haven't taken your IRA distributions yet. I think it's a good time to look at Roth conversion as well. Roth conversion usually makes sense when you can convert at a lower tax bracket than you will have later on when you have to take RMD or distributions to live on it. So if you're on a pretty low income year, just ask your advisor or look online or ask us. And I do think it makes sense to do Roth conversion analysis and at least making sure that you convert anything you can from the 10 to 12% tax bracket. So making sure that you convert as much as you can to fill out those buckets for the year.
Yeah, because if you convert beginning of the year, you don't know what's going to happen the rest of the year. You could end up having a high income year and then you converted in the top tax bracket, which is definitely what you want to avoid. And so now, as Val said, you're at the end of the year, so maybe you had some big expenses or just a lower year at work, and you can potentially, or as Val said, if you just retired and so now your income's dropped, we can basically look at converting up to that next tax bracket, and hopefully you're converting along the way at a lower tax bracket than when those RMDs were to come out later in the future. So there's a little bit of analysis involved, but it's fairly straightforward once you have the numbers. It's a really good opportunity to get that in before the end of the year.
Yeah, and it's worth looking at it on a window year period. Let's say instead of looking at a one-time conversion, sometimes it does make sense to do it on several years and usually end of the year every time. And then you can adjust the number as you get closer to December 31st. And then, a little reminder, don't forget your RMDs if you're 72 and above. And then HSA as well. HSA is probably one of the best vehicle out there because you're able to get a tax deduction on the front end and then it grows tax-free. So if you're eligible for an HSA, I think maxing it out if you can is a no-brainer for sure.
Yeah. So there's, and you're kind of scratched the surface here. There's definitely other end-of-year planning items. If any of you guys have questions out there, we're happy to discuss anything we mentioned and any other strategies. But we just wanted to give you a few of kind of the more popular ones, useful ones. And then as we said, some can work regardless. Some work well in high income years and some work well in low income years. So pretty much there's opportunities regardless of how your taxes are going to end up this year. So let us know if you have any questions and we're happy to help.
Yeah, as a reminder, we do a free first phone consultation or free first planning meeting as well. We call them introductory meetings. So feel free to call us at 918-727-7100 if you have any questions.